Over the last 12 to 18 months, many homeowners have been reluctant to sell their home because of short inventory, making it harder to move. How are you supposed to sell your home if you can't find a great one to buy? In March of 2021, nationwide, we saw a 53% decrease of homes available compared to a typical March. This low availability of homes, combined with the recent increased demand to buy from residents here and those out of town moving to the Triangle, has sent prices skyward. Not to mention crazy low interest rates, which have made borrowing much more affordable, pushing prices up even more. But the market could be in for a change, because according to the annual Realtor.com survey, significantly more homeowners are considering listing their home within the next 12 months. Typically, about 8% of homeowners indicate they intend to list within the next 12 months on that survey. But in this survey, there was a 25% increase in the usual amount of homeowners indicating they may list in the next 12 months. And these homeowners appear serious, with more than 75% of them indicating that they are taking steps to prepare their home, like making repairs, cleaning, and redecorating. So not only have a lot of owners indicated they will list in the next 12 months, but in addition, homeowners considering a move in the next 2 to 3 years said they will sell in 2022 if the conditions are right for them now. If that happens, we could see a huge boom in the inventory of homes which are available. So stay tuned for this video, where we'll be talking about how this change in the market may make it the right time for you to decide to make a move here in the Triangle. And why, if conditions change, it may be a lot harder for you to make the move that you've been dreaming of. All that is coming up next. Hey everyone, John Gallagher, broker with Keller Williams here in Raleigh. Remember to click in the description anytime to our website and hit the blue button to start simplifying your home sale or purchase. Talking is completely free, and we make it easy by working on your schedule. So don't forget to click, and if you're enjoying this video, be sure to leave a thumbs up and subscribe. Now let's jump into the video. Lately, we've seen a perfect storm of a low supply of homes for sale, coupled with a huge increase in demand to buy. In addition, and possibly more impactful, is the record low interest rates. And in the Triangle, all the out-of-town buyers are also keeping prices up. These three factors have pushed home prices up, especially because buyers have been able to make higher bids while keeping their monthly payments low. And people have noticed homes in their neighborhood are selling for way more than they bought for just a few years ago. And their friends and family are refinancing and upgrading because borrowing money is insanely cheap. But we could see a pretty big shakeup, because as this survey indicated, a lot more people are planning on listing than we've seen recently. So things might get pretty different, because lately no one's wanted to sell and everyone's wanted to buy, and rates have been consistently low. Low rates may sound great for some people, but it's held back others who haven't been able to sell because it's hard to find their next home. And timing the closing of that next home gets even more complicated. These timing concerns have been fueled by the short inventory, and an increase in listings may eliminate the concerns of people that are selling and buying, so they can move forward with their plans. It'll be easier for people to get their next home, and if rates remain low in the early parts of 2022, we could see a window of opportunity where we see a lot of homes to choose from and still have low interest rates. But no one can predict the future, so here are a couple key indicators to keep an eye on the market and how it changes. The first indicator we're going to take a look at is days on market. Keeping an eye on days on market will help you see when more homes will become available and buyers will have more choices. So if you're selling, you'll have a smaller pool of offers to choose from if days on market is increasing. A small pool of buyers usually means sellers will likely be waiting longer to get an appealing offer. Homes in the triangle have been selling fast. In fact, on average, 3 days. So if you notice sales are taking longer, you know it's because sellers aren't getting as many bids, or they may not even be getting immediate offers. Days on market slowing down also impacts the amount of inventory available. If homes are taking 3 days to sell now and they increase to 6 days, that means there are twice as many homes available presently on the market. The number 2 leading indicator to watch is list price versus sale price. People are seeing homes in their neighborhood presently go for record prices. So they see that and they think, well, I can list for that plus $5,000 more. So seller expectations have remained very high. But when we see the market change and less homes start going for over the list price, that will mean buyers no longer need to pay these premiums because there are less competing buyers driving the price up. That will indicate that owners may be a little too ambitious with their price offerings, and buyers are no longer willing to pay those premium prices. Since homes going over list price has been the standard recently, when you see that start to drop, this will be a big indicator we will see less buying pressure, leading to sellers waiting longer time periods and an increase in inventory of homes. A third indicator that we feel is important is the microeconomics of your home situation. This means that you not only keep an eye on the general market, but the niche market of the home that you're selling and or buying falls in. For example, if new townhomes are being built right down the street from yours, this can directly impact how much people are willing to pay for the home that you own. So watching the general market is a great idea, but knowing your specific market, the niche you fall in for your purchase and for your sale, will be much more directly impactful to you. Now that we've identified what a boom in inventory could mean, let's take a look at some factors that could influence people's choices to buy or sell. We feel interest rates being so low have been one of the major drivers of home prices. The chairman of the Fed, Jerome Powell, has recently commented that interest rates will start to be increasing. No one knows when or by how much interest rates will change, but when they do change, it will affect the marketplace directly. Buyers won't be able to bid as much, and sellers subsequently won't be able to demand as much. In the past, we have seen rates go up as much as 2% in an 8-week time period. Now, a 2% rate increase may not sound like a lot, but if you want to sell your house and people are willing to pay $350,000 for it now, and you'd like to upgrade to a home worth $500,000, you may be a little surprised at how much more you and the prospective buyer of your home will be paying. We're going to take a look at a real example. Recent closings of homes have gotten 30-year fixed rates at 3.125%. So if a buyer puts 20% down and they purchase your home for $350,000, that buyer will be paying $117,000 more in principal and interest if the rates increase from 3.125 to 5.125 on a 30-year fixed mortgage. That's crazy. And if you want to upgrade to a $500,000 home and put down 20%, the impact of rates going from 3.125 to 5.125 in your case would mean you'd be scheduled to pay $167,000 more to the bank over the life of that loan. So if you're considering at some point in the future making an upgrade, you might want to act now so you don't miss these crazy low rates. And don't forget to click our website in the description to see how you can take advantage of these low interest rates right now. The overall payment increase for both of these houses is $284,000. That's like a whole nother house. Do you want to risk paying this much, or maybe even more over the life of your home? Keep in mind, interest rates have not always been this low. In fact, throughout most of history, interest rates have been more than double what they are today. So it isn't unreasonable to expect that they could increase to that level in the future. And we have seen rates go up 2% in less than 8 weeks. Interest rates going up will mean buyers can't afford as much and sellers can't sell for as much. So if you're buying and selling, this could hit you very hard. The same home you're looking at now that's well within your budget could become unaffordable in just a few short months. So if you don't time your home move correctly, you could miss out on this great opportunity, and it could take you years before you're back in a position to make the move you've been thinking about. With this in mind, we believe this window of opportunity could be a great time for you to move forward and get the home you've been thinking about. So we obviously feel interest rates won't be this low forever, so we recommend consulting with us so you can see how you can take advantage of these rates. So don't forget to click in the description to our website. But hey, will all these homeowners indicating they're selling actually follow through if interest rates change in 2022? Buyers have been able to bid more and more because it hasn't added much to their monthly payment. But will we see all these homeowners list even if there's a supply surplus and rates do go up? We think it's possible some people may miss these conditions that we're seeing today. And like we touched on before, this can especially impact those who are both buying and selling. If you can't sell your home for as much today, and borrowing money to buy your next home is more expensive than it is now, then you could very well end up paying more. While we think interest rates may be the most important factor, a stock market dip and a decreased share of out-of-town buyers can also impact where our real estate market goes. The stock market continues to remain at all-time highs, just like our home prices. So if stocks see a drop in 2022, people won't feel as comfortable paying premium prices for homes. We've seen in the stock market a rise of retail investors and lots of folks using high margin on their accounts. This makes the overall market riskier and subject to a potential drop. So even if you don't own any stocks or assets like that, this could still impact you and the value of your home and your subsequent purchase. So what do you think will happen to the housing market, and what are you doing to prepare? Will prices keep going up, or will something cause them to drop? What do you think will happen in the Triangle real estate market in 2022? Please tell us what you think in the comments below. And don't forget to like and subscribe so you don't miss out on our weekly videos. Hey, are you still watching? You're awesome, and we appreciate you. It helps us out big time in the YouTube algorithm. Thanks again, and we can't wait to see you buy your Triangle Dream home like a pro.